I think the holdings in KOID is not actually listed in US, it's mostly listed in Hong Kong or mainland China. So there's less delisting risk compared to other ADRs. Second, I think like ignoring China is more a risk in the humanoid space, right? If you think about like China is probably one of the biggest market for humanoid deployment. Together with US. You think like US is really good, like the AI, the models, the brain technologies, right? SAMIs. But China is really good at making very cost efficient manufacturing, especially around robotics.
So it's my birthday, and this year I'm celebrating by giving a special gift away to one of you. And to officially wish a happy my birthday to you, I've packed this tote with a few surprises from our signature Few Crew merch portfolio. And it's not just random merch. Inside you'll find some items that really quietly signal you know exactly what you're doing in these markets. And the tote, well, it won't hedge your portfolio, but it will make you look smarter than anyone pretending they know what risk on means at the grocery store. If you want it, here's what you need to do. Follow Lead Leg Report on X. Follow Mela_Schaefer on X. Subscribe to Lead Leg Media on YouTube and like and share this video. Only one person gets the tote, but since everyone gets our content, it's really a happy my birthday to all of you. I'm your host, Melanie Schaefer. Welcome to Lead Leg Live. Now, today we're talking humanoid robotics, and the headlines have gotten a lot more real lately. In the last week alone, Reuters highlighted how Chinese humanoid robot makers are using the Lunar New Year programming to showcase scale and capability. And the Wall Street Journal detailed how aggressively China is funding and industrializing humanoid robots to compete globally. My guest today is Derek Yan, Senior Investment Strategist at KraneShares. Derek, it's always great to have you here.
Thank you for having me. Good to see you again.
So to get right into it, the humanoid robotics theme is generating a lot of excitement. But advisors have seen thematic ETFs launch at the peak before. Clean energy in 2021, metaverse in 2022. What makes you confident that humanoids aren't just the next overhyped theme and that KOID, KOID, isn't arriving too early or even too late?
Yeah, I think like that's like fair hesitate by advisors who've been investing to some hypes before, right? Like think about like either clean tech, but like I think more metaverse is really something never happened or just happened a little bit. I think it's different for humanoid because one, you see like so many companies start to deploy in real factories, like Tesla's using it for these like auto factories. You have like Benz, you have BMW, you have like Amazon using in logistic. So all those companies are showing this technology is more than just like technology, is actually starting in the commercialization phase. So once those revenue generating become like scalable, this can become a thematic. I think like investors start to recognize. So investing in the humanoid industry right now is actually quite early, but it's good because usually when the investor, the main audience of the Wall Street, recognize the theme, it's already like went up a lot. And I think like compared to just like metaverse, right? Think about like persuading people to put like metaverse headset. You don't need to really persuade a lot of factory or enterprise owners to buy humanoid because like there's constant labor shortage. You've interviewed a lot of like business owners. That's issue for decades. And if humanoid can solve this problem, I think that's where it's sustainable structural change for a lot of factories and a lot of enterprises.
Talking, Derek, a bit about the strategy, KOID uses an equal weight methodology across about 50 holdings rather than being market cap weighted. Can you walk us through why that matters for advisors? What does equal weighting capture in this space that a cap weighted approach would probably miss?
Yeah, when we look at a portfolio, right? Like, so think about like ecosystem of humanoid. There's like brains. Brain means the AI companies or semiconductor companies. That's like $1 trillion, right? Like like those like huge market cap. If you just do market cap weighted, you're going to be dominated by those players, right? Like I think like for investors today or the financial advisors for their clients, like Nvidia or Tesla is already heavily owned by a lot of investors. So we don't want that, right? We don't want like not a fund just like being overly weighted to the AI and the semis. So that's why eco-weighted give you more diversified approach towards the other component of the ecosystem, like the body, right? The actuators, the sensors like can make the robot to see, to feel, actuator make the robot move, and you have the rare earths, you have a lot of like components that's really critical for the manufacturing, for the whole supply chain of humanoid. And you have integrators who assembling and deploy the humanoid that's really competing with like Tesla's like globally, right? So when you have a theme that's happening outside the US as well, in China, in Japan, in Europe, you want an eco-weighted and global diversified basket that actually is very good for portfolio construction.
Yeah. And so talking about all the critical things that go into the production of just one humanoid, Morgan Stanley is projecting that there'll be 1 billion humanoids and 5 trillion in revenue by 2050. And I think Goldman sees a 40% CAGR over the next decade. Those are staggering numbers, Derek. How should advisors think about those projections when setting client expectations, and what has to go right in order for that forecast to play out?
Yeah, those forecasts and projections definitely were exciting. Those are big numbers. But I think for like investors, they should see that more as directional. The directional is really like a mega trend, right? So you can be 5 trillion, or you can be 8 trillion, or it can be 3 trillion. But like, just think about now, the market it doesn't exist. So it's growing from 0 to 1 to something. Even say very conservatively, the market is like $500 billion. Well, that's a huge market, right? If you think about like, by the time like Morgan Stanley projected, like it can be much bigger compared to the auto industry, right? If you have an industry that's going from 0 to bigger than auto industry, I don't know how many companies going to make a lot of like revenue and earnings from this mega trend. So for that directional trend to happen, I think now we're in early stage, right? Technology is really breaking through. You have AI foundational models making the robotics getting smarter every day. And you have like commercialization by like auto company, by like a lot of big tech company, logistics company. And that trend is accelerating, right? So we have, as you said, you have government, you have big companies supporting this, you have news, you have announcement every day. I think just monitor that trend, and you have seen a lot of kind of like companies give a big milestones. That's kind of like the thing people should watch as the humanoid industry continue to evolve.
Yeah, and I mean, what you're speaking about is sort of a global movement, and KOID has significant exposure to Chinese companies alongside U.S. and Japanese names. But for advisors whose clients may have concerns about a China risk, I mean, regulatory, geopolitical, delisting even, how do you make the case that China exposure is a feature and not a bug, especially in this particular theme?
Yeah, I think that's a fair concern. As like there's a lot of like geopolitical risk right now, right? So I think one, the holdings in KOID is not actually listed in US, is mostly listing Hong Kong or mainland China. So there's less delisting risk compared to other ADRs. Second, I think like ignoring China is more a risk in the humanoid space, right? If you think about like China, is probably the biggest, one of the biggest market for humanoid deployment, go together with US. You think of like US is really good, like the AI, the models, the brain technologies, right? SEMIs. But China is really good at making very cost efficient manufacturing, especially around robotics. So you have like a lot of Chinese humanoid unit like IPO coming. I think this year, like talking about like Unitree, the AGI bot, the Gal bot, that wave of IPO create some opportunity for investors as well. So ignoring China in humanoid is like ignoring China in the like clean tech back in like say years ago, right? Like if you miss the China like boom in the clean tech space, you kind of like miss the big part of the ecosystem. So adding China to the portfolio is kind of like a must. But China's exposure is also managed. Think about like adding like 30% exposure to China in a global portfolio is where like if you think about sizing the KOID as a satellite allocation or just like a 5% allocation in your portfolio, that's something is very manageable, I think, for the client volatility.
Yeah, and I think even with single stocks, advisors know that there's China risk involved in anything to do with tech. And as you mentioned, the analogy with clean tech in the past. But Derek, for an advisor listening, carrying on with this idea right now that probably already owns NVIDIA and Tesla in client portfolios, what does KOID give them that they don't already have through those mega cap positions? And I guess what I want to know is, how do you think about overlap versus additive exposure?
Yeah, so I think that's a good question because first, we acknowledge that the clients is, oh, I already own this theme, right? Like humanoid, I own like Tesla, I know NVIDIA. NVIDIA is the platform for the model training. Tesla is like doing the Optimus. But I think like what's important to acknowledge that is you're missing out the whole ecosystem. As I said, the brain. There's more like AI technology. There's more models. There's more like semiconductors involved in the ecosystem. Then more importantly, I think the body is important. Like for example, like the harmonic drive, they're doing the precision gears that all the humanoid company can need, right? Whether it's in the US, in the China, in Japan, like if we don't know who's going to be the winner, right? Like it's hard to say Tesla is going to be the humanoid company that every country every factory can use. It's hard to say that. There's other integrators, right? In Unitary AGI bot or in China, or there's like other companies like in Japan or like in Europe, in South Korea. There's so many players out there that they gonna require a lot of components in actuators, in rare earth, in those materials. So I think like those pick and shovers is likely to be the winner at this stage when there's so many brands and like integrators competing, right? So you want to own the ecosystem, not just owning two companies that's getting you a little exposure. So adding a KOID as an allocation to the portfolio is adding the exposure to the whole ecosystem and make the humanoid theme more meaningful in investors' portfolio.
Yeah, I mean, that's the beauty of owning an ETF and as well as owning single stocks perhaps above that. And that's what I wanted to ask you about next. Derek, where does KOID fit in the portfolio construction conversation? Is this a core holding? Should it be a satellite position, a replacement for an existing robotics or AI allocation? And what do you think about sizing?
Yeah, I think like it really depends on the investor. If the investors really just want to do some like exploratory like allocation, it could be just like 1 to 2% like satellite. That's kind of like you give like a little bit like taste, like you have some minimal impact on the portfolio if the humanoid industry really deliver like very strong alpha in the long term. But I think for like usually investor who already have a thematic exposure to other robotics or AI or other like high conviction themes, could be like the KOID can be like 3 to 5% allocation. Can be a replacement to other robotics because I think a lot of the traditional robotic ETF, they focus on the traditional industrial automation, industrial arms. Those kind of like themes has been really matured and really slowing down, where the humanoid and the embodied AI or the physical AI is really taking off at the next stage of the robotic and automation growth. So replacing those robotics were like the AI exposure to really broadening the allocation towards the physical AI makes a lot of sense for investors.
Yeah, and Derek, I mean, you mentioned the stages that we're in, and we talked about, projections to 2050. Say we're sitting here a year from now. What milestones, commercial deployments, revenue inflections, policy developments, et cetera, would you tell the humanoid thesis is tracking ahead of schedule? And what would be the warning signs that maybe a timeline is slipping?
Yeah, I think like a lot of factories and a lot of like business, they are testing and deploying the humanoid in their like a production line, or like doing logistics, or like assembling, or like I think like there's a company doing the home humanoid, right? Like I think they're testing the humanoid in your home. So a lot of those milestones like should worth like watching, because I think according to a lot of like business owner, the performance of humanoid in some cases is like 98% good. Like if you have 98% good, they're just waiting for that 1% gain. That like when it's 99% good, like then they can start a mass deployment. So when you have like mass deployment, I think that's a very strong signal for this industry to take off. If you have like say a humanoid company, whether it's Tesla announced, or like other brands announced, they're gonna be like thousands unit production delivered, or like 10,000s. That's kind of like a big milestone. I think like that's very key milestones investors should keep watching, because when you have like thousands or 10,000s unit delivered every year, that means the economic or the ROI is real, that the business owner, the buyers really want those humanoid to be in their factory, or be in their hotels, or in their homes. So I think that's something definitely is a key milestone to watch. But if they say, it's like if they plan to deliver, but like what if like, there's some like delay because of say a humanoid just like hurt a person, right? Say like in a factory, like then there's regulatory risk, where that could be like something I think like could slow down things a little bit, because you do have like this is something totally new, right? We don't have like our co-worker to be like a robot before, right? So you have that, you have to think about like what's the regulatory, the risk, and all the insurance and everything like to be ready. This is very similar to like autonomous driving in a way, just like you have the technology that's ready, that's coming, or like just on the road. Then like you have to figure out the regulations on this. So it could be like a little bit back and forth, but I think like even though just like seeing the robot in the factory in our home can be very exciting for a lot of investors.
Yeah, it's impossible almost for me to imagine what it's going to be like when all of this comes to fruition. I remember the pictures of when KraneShares had the robot in New York City. But Derek, just before we wrap up, for anyone watching who wants to learn more about KOID and read your research on humanoid robotics and embodied AI, where's the best place for them to go?
Yeah, investor can go to KraneShares.com for information. We write a lot of articles on the humanoid, on the AI, on the emerging technologies. Specifically for KOID, investor can go to KraneShares.com/KOID for the fund information, or just like articles we wrote about humanoid space. Yeah, so like we did a bear rating on NASDAQ, and we actually did another bear rating with the humanoid in London Stock Exchange. So it's like really seeing the robot ring the bell, and I think that's like another milestone for the financial industry. We could see like, I don't know, financial analysts like as the humanoid soon. Hopefully my job's going to secure.
It's fantastic. Well, Derek, as always, thank you so much for joining me today. And thanks to everyone for watching. Be sure to like, share, and subscribe for more episodes of Lead Leg Live.